In the ever-evolving world of electric vehicles, companies are constantly making moves to stay ahead and remain relevant. Today, we're diving deep into a significant move by Mullen Automotive, an emerging name in the EV space. Their recent announcement has the potential to shake things up and could have a notable impact on their stock price. So, if you're an investor or just curious about the latest in the EV market, you won't want to miss this. Alright, let's take a look at the news. Mullen Automotive, an emerging electric vehicle manufacturer listed under the NASDAQ ticker MULN, recently made headlines with their announcement of a $25 million stock buyback program. This is no small move. The company has set its sights on purchasing a whopping 3.7 million shares of common stock by the end of this year, amounting to an aggregate of $3,626,000. But what's even more intriguing is the context behind this decision. David Michery, Mullen's CEO and chairman, made a personal purchase of 102,040 shares in the open market on August 16, 2023, at a price of $0.9842 per share. This isn't just a casual investment, it's a clear signal of the company's commitment. They're aiming to regain a minimum bid price of $1 per share, a requirement to remain compliant with NASDAQ standards. Now, for those unfamiliar with stock market regulations, NASDAQ had issued a notice to Mullen Automotive on March 7, 2023. The notice essentially warned the company that if they couldn't demonstrate compliance by September 5, 2023, their securities would face delisting. This is a significant concern for any publicly traded company, as delisting can severely impact investor confidence and the overall perception of the company's financial health. In response to this, Mullen took a strategic step by enacting a 9:1 reverse stock split the previous week. This maneuver temporarily pushed their per-share price above the $1 mark. However, the victory was short-lived as the shares traded down below the minimum soon after. So, why is this buyback so crucial for Mullen and its stock price? Firstly, stock buybacks are often seen as a sign of a company's confidence in its own future. When a company buys back its shares, it's essentially saying, "We believe our stock is undervalued, and we're willing to invest in ourselves." This sentiment was echoed by Michery, who stated, "We believe that our stock is undervalued. The company has begun production of our Class 3 EV with deliveries pending to customers and a strong balance sheet allowing us to execute on our business plan." Furthermore, buybacks can lead to a decrease in the number of shares available in the market, potentially driving up the stock price due to the laws of supply and demand. With fewer shares available and if demand remains constant or increases, the stock's price can rise. However, it's essential to note that while the buyback is a positive move, Mullen's stock was down by 8.5% in midday trading on the day of the announcement. This indicates that while the company is optimistic, the market might still be apprehensive. In conclusion, Mullen's decision to launch a substantial buyback program is a strategic move to bolster investor confidence, meet NASDAQ requirements, and potentially drive up their stock price. The coming months will be crucial for Mullen as they navigate these challenges and work towards establishing themselves as a formidable player in the EV market. Thank you for joining me on this deep dive into Mullen Automotive's recent moves. If you found this analysis insightful, please give this video a thumbs up and consider subscribing for more in-depth discussions on the latest market news. And I'd love to hear your thoughts. Do you think Mullen's buyback program will successfully boost their stock price in the long run? Drop your opinions in the comments below, and let's get a conversation going.